Hello, this is Quiz Access Chapter 3, Problem 6. So we're starting off here. This first entry wants us to account for depreciation. So we're doing year-end adjustment, and it says here that this is for the year, so we don't have to do any calculations. We're doing the December 31st year-end adjusting entries, and this is for the year. So, go away. There we go. So we want to start off with our debit and then do our credit. Expenses always have a normal debit, so we want to do our depreciation expense for the equipment first. So let's find that. There it is. So we're going to debit that 6,000. And then we're going to want to do our accumulated depreciation. Now this one is linked to our equipment account, which is and this one's a contra account, meaning that the normal balance is the opposite. Equipment is an asset which has a debit normal balance, so our contra account here is going to be a credit. So there it is. And that's how we'll account for that. This next one here wants us to adjust the amount of prepaid insurance that we used. So we started off with a 3,000 debit balance for prepaid insurance. That is an asset, so we know that's a normal balance. And there's 1,100 unexpired coverage. So that is what we want to keep in our prepaid insurance account. So we'll start with our debit here. We want prepaid insurance to go down. So our equity must also go down to keep the accounting equation in balance. For equity to decrease, the insurance expense must increase and it has a debit normal balance. So here we're going to debit our insurance expense by the difference between 3,000 and 1,100, which is 19. And then we're going to credit our prepaid insurance by the same amount. And that's because we want that to go down, because we used 1,900 of our prepaid insurance. So the used amount goes into our expenses, and the used amount comes out of our prepaid insurance, comes off that asset. All we have left in there now is going to be that 1,100. So record that. This next part's a little tricky if you're not paying attention. So it says we received cash in advance for our work. So knowing that we're doing adjusting entries, we've already accounted for that cash and we've already put that into our unearned revenue account. So what are we adjusting here? We're adjusting unearned revenue and services revenue. 1/3 of the work has already been completed, so we're only going to adjust 1/3 here. Our liability of unearned revenue will go down by 1/3 since we performed 1/3 of our obligation. Our revenue will increase because we have performed those promised services. When liabilities decrease, we have a debit, so let's do that here. So our unearned revenue, 2,000. And then our services revenue will increase. So we have a credit because when our revenues increase, our equity increases, which means we have a credit. All right, next we have some wages payable to deal with. So they've worked, we haven't paid them yet. Now we have a liability of wages payable to deal with. So we need to increase our wages expense, which means that we are going to debit that. Expenses are always a debit when we want to increase them. So, and our liabilities, our wages payable. To increase our wages payable, we have to credit that because liabilities normal balance is a credit. So we'll go ahead and record that. Lastly, we have interest. So we earned it, but we haven't yet received it. We haven't recorded it. So we're going to have an asset called interest receivable, and we'll have equity from interest revenue. Assets have a normal debit balance and revenue is a normal credit balance. So we will debit our interest receivable. And we're going to credit our interest revenue. Sorry. There we are. So when we go back and look at our journal, we should see that all of our debits and credits are equal. We'll go ahead and give that a quick check. And there we go. Please let me know if you have any questions. Go ahead and put it down in the comments and I'll get back to you as soon as I can. Thank you.